Hi everyone, let's cover my Elliott wave scenarios on Bitcoin on the 1 hour time frame, starting with the most bullish scenario where we count this move to the upside as an impulse in a wave A, followed by a 3-wave corrective structure to the downside in a wave B, and then we look for another impulsive move to the upside in a wave C. Minimum target for wave C is taking out the high of wave A. However, we have some great support between 104.6k and 105k, so that would be my main target area. The common target for a wave B is between the golden pocket and the 786 Fibonacci, taken from the start to the end of your wave A, which, as you can see, has been touched. We also touched the support that we were waiting for a very long time. A lot of patience needed here to touch this box between 94.9 and 95.6k, but we finally did. Therefore, the invalidation now for this scenario after a double zigzag WXY is this low here. We look for moves towards the upside. If we then look at some other scenarios where we do take out the low and actually test the lower support that we still have here, another blue box between 93.6 and 97k, which includes this point of control here at 93.9, then this is the first scenario here that comes to mind, which quite simply is an unfinished WXY. So the scenario is exactly the same, but internally you then have WX and then you have an unfinished ABC here inside wave Y, where this is then counted as a flat structure inside this wave B. Invalidation is taking out the high here at 100.2k. Target area is similar to the box over here as mentioned earlier, around 93.7k. Now, alternatively, you can also move into a WXYXZ, 3-wave W, corrective X, 3-wave Y. There is a way to count this structure to the downside as a 3-waver. Not gonna lie, if you move into the lower time frames, there's definitely a 3-wavy-ish structure to be counted here. And that would then at least open the door to a WXY and then XZ. But a WXYXZ is incredibly rare. So therefore, even if you do come down, this would work better, in my opinion, than a WXYXZ. And then finally, we have actually your only bearish scenario really, which is a diagonal. So here we then have a finished 3-wave structure to the upside. This is then labeled as either an ABC or WXY. It doesn't matter, as this structure is counted as a diagonal in a wave A. So we then have a wave 1, 2, 3, 4, and then a wave 5. Look for a 3-wave corrective structure to the upside in B, and then a move down. And especially this is then the biggest difference with the bullish scenarios, where you still take out the low, you test the support here, but in the bullish scenarios, you want to see an impulsive structure to the upside. Strong continuation. In a wave B, you look for a 3-wave corrective structure to the downside, and then you move further to the downside to take out this low again at 91. So that is the difference. This scenario is an alternative scenario, lower probability scenario, as long as at least you do not take out this low. And even if you do take out the low, it remains a lower probability scenario until this structure to the upside is a corrective structure. That is when the probabilities for a bearish scenario would increase. Now, just to talk about some invalidations here. First of all, you can take a channel from the end of 1 to the end of 3 to the end of your wave 2. Wave 4 should not touch the upper trend line of this channel, currently around 99.3, 99.2k. And if you take a Fibonacci trend-based Fib from the start to the end of 2 to the end of your wave 3, then a wave 4 also should not touch the 1-to-1 here at 99.3k. So 99.3, 99.2 is an important area on the chart to pretty much invalidate this diagonal, as a contracting diagonal. Wave 4 is not allowed to be bigger than wave 2, not allowed to touch that trend line of the channel. So basically, the moment price is touching these levels, the bullish scenarios increase in probabilities, and the bearish scenarios, this one, decrease in probabilities. If we then look at the CVD divergences, then locally here on the 15-minute, we had some bullish CVDs after touching the support box, which is exactly what you like to see. Then price moving to the upside, bit of bullish CVD once again. Currently here you can see very locally some bullish on the 5-minute here, by the way. Look at the blue line. You can see it here, higher low in price, low CVD. But also a little bit of a bearish CVD. Now, arguably, if we go to a 3-minute, the bearish CVD, if I open this, there we go, already played out. So you made a high, created lower highs here on the chart with bearish CVDs. You can see the check marks here, and price moved towards the downside. So the first bearish CVD that we had with this high already played out, and that's the most important CVD. A second, third, fourth, fifth CVD with the same pivot high or pivot low lowers the probabilities for that CVD to play out. And I can also imagine that locally we have now touched the 886, maybe even took the high here on mine. No, not yet. But we also here took the 886, taken from the high to the low. You can see that the 886 Fibonacci in orange is touched even with the higher low here. And the fact that the 886 is touched increases the probabilities to still take out that high at some point. Now, we also have some news this week, so make sure you trade safe. Tuesday here, 4 p.m. Central European Time is the first day. Then on Wednesday, which is likely going to be a very volatile day. Then on Thursday here, February 13th, and then here on a Friday as well. So definitely a bit of a news-heavy week. If you then look at the probabilities and the polylines of these scenarios on the 1-hour time frame, we keep it simple. First of all, on the higher time frame, not covered in this video, but on the higher time frame, the probabilities remain higher for the bulls. We're still looking for higher prices and all-time highs. Even though we might range here for a longer period of time, that's no problem. Probability is higher to still move up on the higher time frames. And then on the 1-hour time frame over here, the probabilities are higher for the bullish scenarios compared to the bearish diagonal scenario. At the moment, we're looking for at least a bounce in all of the scenarios. The blue line is your most bullish, or down to support and another move to the upside. It doesn't matter, doesn't change the probabilities unless, and that is what I also write in this little bit here, especially here at the end, if you take the low again and then have a corrective structure to the upside, that is when a diagonal will increase in probabilities. But for that to happen, you first need to take out the low, and then you need a corrective move up, not an impulsive move up. So until that happens, your probabilities for the bulls are going to be higher compared to probabilities for the bears. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.